Hello everyone, welcome to the 10 Investor channel. So before I get into today's video, I wanted to wish all of you a very happy Diwali. And I hope this Diwali brings you loads of joy, good health and also wealth to you and your loved ones. Now if you haven't followed me, I am 10 Investor and I do a lot of videos on investing and trading, and I teach you technical analysis and I help you also turn into a very good profitable trader, and how you can also switch from mutual funds into equities. So for this special occasion, I wanted to start off with a SIP video or a SIP video for stocks. Okay, I did this last year as well. For Diwali last year, I did a SIP video, and those stocks have done pretty decent, and they've given higher returns than mutual funds. And also did another SIP video somewhere in the middle of this year. Now, in this SIP video, we're going to talk about 4 stocks which are excellent blue chips, and also mid-cap stock which might do well going forward. And all these stocks are just beginning to enter a very long-term uptrend, and I feel they can do really well. Now, if you want to buy stocks today on Muhurat Trading, so Muhurat Trading is going to happen on Monday the 24th, and the timing is between 6 and 7:30, and between that you can buy stocks. So you can, if you've not done investing at all till now in direct stocks, probably this is the first day for you to buy stocks and also learn and begin your journey into trading and investing in stocks. Okay, so let's jump into today's video. And what you have to do in this SIP is you need to stick to the 4 stocks, or at least stick to stocks that you want, and you need to put money in a very disciplined manner, which means every month you need to decide how much amount you're going to put and keep putting that money every month until the stock gives you your target returns that you're looking for, right? So let's take a look at the first stock today, which is Axis Bank. Now, banking sector as a whole has been doing really well, especially if you looked at the credit growth, if you looked at how the banking NPAs have transitioned from very bad to really good. So banking NPAs have been at all-time low, and the entire sector has been doing really well of late. The numbers have been phenomenal, especially we saw numbers from many banks last week, and they have posted some really good numbers. And given the credit growth, given the potential that India has, I feel banking as a sector is probably the sector that I have to look for the next 3 to 5 years and park some of your money there. So let's take a look at Axis Bank. In front of me, I have this short screenshot from Screen.in. It is a very good company. Obviously, it's a blue chip. All of us know what Axis Bank does. It has a pretty decent ROC, ROE. Sales growth has been very good in the last 3 years. Profit growth has been excellent in the last 3 years. And look at those component sales and profit growth. Now, all these stocks that I'm picking up today have posted very good sales growth in the last many years. And I'm looking for, very good CAGR in terms of sales growth and profit growth in the last many years. Now, these are pretty consistent numbers, and it's in fact increasing in the last 3 years or so. It's probably because of the base effect we had during COVID. But overall, for me, these numbers are excellent for a SIP candidate, and I think it might do well. Now, I'm not getting into more details, but let's take a look at the fundamentals, yearly, trend in terms of profit and sales, yes. So here, if you see, revenue since the last 10 years has gone up from 15,000 crores to almost 68,000 crores. Now that's a massive jump in the overall sales that Axis Bank is doing. That's because of the strong brand name it has. But also, if you look at the profit here, net profit, we've gone up from 3,000 crores to 14,000 crores. That's almost a 5x jump in net profit that we are seeing here. And also, dividend is pretty good. This company also gives dividends. So if you can accumulate a decent number of shares in the next few months, you might actually do also get a dividend as extra income for your portfolio. Okay, so that's from fundamental perspective. In a technical perspective, I'm looking at monthly charts. Always in SIP candidates, you should not be bothered about the daily charts. Focus on the weekly and monthly charts, or even higher time frames. But monthly charts is pretty good enough. And here, if you see, Axis Bank has been in a very strong long-term uptrend, right? So we've had these major dips. It goes up again, it comes down, and it heads higher. So I'm expecting the trend now to break out from here. And we had this beautiful inverted head and shoulders pattern forming, and we had this nice resistance around the levels of 850 levels. And once we take out those 800 levels, 820, 30 levels, then we're going to begin a very long-term uptrend in Axis Bank. Now, by chance, if the stock doesn't really break out from here, and if it tries to consolidate over here, then all you have to do is continue a SIP, because eventually the stock will head higher. And by then, you would have accumulated some good number of shares. So if the stock doesn't perform immediately, don't worry, because these are blue chip stocks. They will not directly jump 50% in a month. They're going to take its own sweet time, and they might give you some good returns in the long run. The targets for Axis Bank here, I'm looking for targets of 2,000 levels in the next 3 to 5 years. and which is towards the upper end of the channel, and the stock might do that target probably in the next 5 years or so. Now, it might come a little early, it might come a little late, but until the stock heads towards 2000, I recommend you keep doing your SIP. Or if you want, you can keep doing your SIP until you have accumulated some good number of shares and then stop doing the SIP, right? So that's the first stock I want to discuss today. Now, moving on to the second stock, which is HDFC AMC. Now, I also did recently a video on HDFC AMC and HDFC Life. So if you haven't looked at it, take a look at it from an investment perspective. Now, but the stock also is good from a SIP candidate perspective, right? Now, the stock is in the, it's a pretty good company, around 40,000 crores market cap. PE is pretty good, ROC is pretty good, ROE is good, and investing as a habit is now picking up in India. If you've seen this SIP amount that has been coming into the Indian markets of late, it has been phenomenal. And I don't see this number going down because India is a growth story. There's more people are going to have more money in their hands, so they're going to shift from equity towards mutual funds, right? And the biggest player in this space is HDFC, right? So HDFC will benefit massively from the strong trend in SIPs and mutual funds, and they might do really well going forward, right? So sales growth has been pretty decent in the last 3 years, and profit also has been pretty decent. Also, if you take a look at the 5 years last CAGR, the 9%, and profit has been around 20%. So that's how I look at some candidates, and that's the fundamental analysis, or at least a short perspective on what HDFC AMC's fundamentals look like. Right now, looking at the yearly trend in sales and profits, they have gone up from 700 crores to 2400 crores. Now, that's a very good jump in the last 10 years, 8 years or so. Also, profits have gone up from 300 crores to 1300 crores. Now, the trend is clearly up, right? So, whenever you look at such clear trends and such increasing operating margins at all-time high, almost at 80% levels, these are very solid numbers, and you don't have to really worry about if there's a stock dips 20-30% from here, then it's a very, very good value buy, and you might have to continue your SIPs with strong discipline. Okay, and that's the only way you can make money, right? So that's a fundamental take on HDFC AMC. Now, looking at the charts of HDFC AMC, we had a strong run, just before the COVID crash. We had a strong run from around 1,300 levels to almost 3,600 levels, and we came back almost back to 1,600 levels. Now, this is a very strong fall in a company like HDFC AMC, and that's why it's a great opportunity to buy this stock at current levels, because this is just a normal correction in a very long-term uptrend, because we had this one-way move up and we are just still consolidating. The previous swing low is here, and we've not had a major consolidation here. So this is the first major consolidation in this company, and it's a beautiful opportunity to accumulate the share in the next many months and to go and do a sip on this. So remember, once we take out this resistance over here, then we are going to probably head towards targets of around 5,000 in the next 3 to 5 years. Now, as I said, we are targeting for somewhere around greater than mutual fund returns. So somewhere anything greater than 12% returns, if you get in this SIP portfolio, then that's very good, because you're doing it on your own, you're learning, and through this journey you also learn how stocks work, how you can move into position trading and swing trading later as well. Okay, so that's the second stock for today's discussion. Third stock is Star Health Insurance. Now, remember, this is the only company in the health insurance space which is listed in India. So if you want to really play the theme of health insurance, which is a big trend, remember, the penetration of health insurance in India is very, very low. Literally, everyone pays, from our own pockets, and money goes from our own pockets. And this is going to change, and people are slowly buying into the health insurance concept. And still, if you consider the global trend, we are nowhere close to how many people have insurances in the Western countries. We are pretty low. Hardly there's any penetration. And this is one of the biggest companies. It has a really good market share in the health insurance space. It almost commands, I think, around 30% market share in the health insurance space. And this has a huge potential in the coming, in the next 5 to 10 years. So for me, this is one of the biggest themes that I play, given that this is the only listed company. If you want to really participate in this health insurance boom that's going to happen, because everyone is going to switch to that, because health insurance is going to become very expensive and people cannot afford that. So health insurance is the only way for you to protect and do not have a very bad day, because in India, if you probably have a very major surgery or a major I hope it doesn't happen, but if you have a major bill, then you cannot pay it from your own pockets, right? So you need an insurance. So if you're not taking one, do take it today. But let's look at what this company is doing, right? So it is a 40,000 crore market cap company. Now, remember, this company has not been doing well in the last couple of years because of COVID. They've had probably a higher number of claims coming in, because of which they've not been able to be profitable. But they were doing pretty well prior to COVID, right? So I presume that they would also continue to do well going forward. But look at the sales here, right? They are going last 5 years. CAGR in sales has been 30% CAGR. They're growing very strong. Now, once they reach a certain amount of revenues, then the operational efficiencies and the technology that they're using in order to sell claims and settle claims, all this will start kicking in and they will start making massive profits. Now, this is a long-term story, so that's why I'm recommending the SIP candidate, and I feel this company can be one of the best companies in this entire SIP story that we're discussing today, right? So if you look at the sales here, I'm looking at the early trend. So since 2015, the sales has gone up 10 times, right? Now that's massive. And also they were profitable quite a bit until 2020, and then because of COVID, probably, I'm not sure exactly what's the reason, but then they are posting losses. But they have a decent operating margin prior to that, and off late they've not been doing well. But that's just a short-term blip, I feel, in this long-term story that we're going to have in India. Right, so that's a fundamental take, and let's take a look at the technicals. Right now, this company was recently listed back in, I think, just around the beginning of the year or just around last year sometime, and we've had a strong downtrend going on in this company, and we are now forming a nice, beautiful inverted head and shoulders. Now, for me, this pattern, if we break out from here, now that's a bottom for me in this company, and we might head higher definitely from here, and we might not even see levels of 600, 700 again if we break out from the zone. And once you take out all-time highs, then definitely we're going to see levels of 600, 500 again. So that's why I'm recommending this right now as a SIP candidate. And once this uptrend begins, we are going to see a massive uptrend in the next many years, and this sector is going to do wonderful in the coming years or so. So for me, the targets that I'm looking for is towards 2000 in the next 3 to 5 years. Now, here I'll try to probably make it very clear: do not sell off this company very early, because we never know how much potential this company has. So even if you get 2000, don't just sell it off and come out. You might see much higher targets. So try to ride the trend and try to trail the stop losses and see how you can capture this mega move that you're going to see in the coming years. So that's the third SIP stock I want to discuss. And the final SIP stock today is Godrej Philips, which is a mid-cap company, and it's not really. Most of you may not be expecting me to discuss this in a SIP portfolio, but I'll tell you the reason shortly. This company also is a pretty good company. It has 6,800 crores market cap, PE of 14.6, ROC of 16, ROE of 13. So those are very good numbers. Okay, so this company actually has been very profitable, and the sales has been growing, not at a great rate, but the profits have been growing very strong. Now that's why for me this company makes a very good candidate for me today, because the sales is growing at a very stable rate, around 2-3%, but the profits have been growing very strong. Right now, if you take a look at the annual trend of their revenues and top line and bottom line, we've gone from 1,600 crores to 1,600 crores. Right now, remember, all the other companies that we looked at had very strong revenue growth, but here I'm looking at a very strong PAT growth. I'm relying on this company to improve their operational margins going forward, and probably look at some other, this is a cigarette company, but if they try to expand, they're also expanding into some other retail outlets and some kind of confectionery space. They have other plans, and if that kind of clicks, then probably they already have a very strong distribution network, and this might actually be beneficial for them, and they might do well even in the other space that they're looking into, right? So that's from a fundamental perspective. Strong top line is not that great, but the bottom line is definitely good, and the operating margin has gone up from 11% to 24%, right? Now that's very, very good numbers. Taking a look at the technicals, this company has been in a very long-term uptrend, and since 2015 or so, it has been consolidating, right? Now, we did not break this previous swing low, so we're still in a very long-term uptrend, and we've retested this channel support here. Now, this is a 7 years consolidation, and this, once we break out, we are again going to head into much higher levels from here towards the upper end of the channel, and that's why I'm recommending this as the last candidate for today. And I'm going to look for targets of around 4,000, which is the upper end of the channel in the next 3 to 5 years. Now, remember, this is a mid-cap company, so depending on how the company performs, if there is some strong triggers for the revenue top line, then definitely this targets can be achieved much earlier, and we might see much higher targets as well. So as I always say, these all 4 stocks I discussed today are on long-term uptrends, except HDFC AMC and Star. They are still about to break out, but they are still in a long-term uptrend as well. They can be in a long-term uptrend, right? So don't forget, all you have to do is every month put a percentage of amount. If you have not started investing in equities, all you have to do is put probably 5% of your monthly income, or try to take it much higher, and 20% would be good. But if you do that every month on the SIP candidates that I discussed about, you're going to benefit 2 things. One, you're going to accumulate a good number of shares, you're going to see some decent CAGR in your portfolio. Second thing is you'll understand how stocks start working, and you'll understand how you can move away from SIP to actual investing in stocks, and then eventually positional trading and swing trading also. Now remember, this is a long-term journey. So on this day, on this Deepavali, I hope you take this massive step, and I hope you enjoy investing in stocks and equities as well. And if you don't want to do all this, keep it simple. Stick to mutual funds, but do invest in markets, because markets can make you rich if you are very disciplined, and if you can put in a significant number of your money savings. If especially if you're young, do it right away, right today. Buy that first mutual funds or buy that first stock, and you will do well for yourself. Okay, so I'm going to again wish you all a very happy Deepavali, and I'll see you in another video. But until then, take care, trade safe, and stay safe. Bye bye.